Hi, folks. Navy Dowdy here for your weekly tax tip. But first, here's the quote of the day. If you say you can or you say you can't, you're right. I think that was Stephen Covey. Whoever said it, it was pretty smart. It may sound odd when you say this out loud, but after considering all the facts, it's quite true to say that not everybody should try and save taxes. It's an emotional but understandable reaction to think that you always want to lower your tax bill as much as possible. However, except in the case of death, the tax code is basically a case of tax me now or tax me later. In many cases, to lower your current tax bill means that income avoided or deductions taken now are going to come back into your life at some later point. One example would be an IRA. You put money in an IRA and lower today's tax bill, those dollars will need to be taxed at some point. When you start taking withdrawals from the IRA, usually in retirement, you will pay tax on that income at today's tax rate. So did you really save anything? Sometimes yes. If you were in the 22% tax bracket, when you funded an IRA and then in retirement, you're in the 12% tax bracket, then you saved in two great ways. One, the on-tax money earns interest, and interest on all that money will be larger than the interest earned on an after-tax remainder over the same time period. And then that larger amount is taxed at 10% less in this example. However, few people really end up with such a simple and clean fact pattern. Working families with kids that earn EIC or Earned Income Credit and other credits are often feeling overtaxed because with kids, every penny is needed. But in reality, they are often only in the 12% tax bracket. Then they put money in a 401k and by accident avoid paying 12% tax on those contributions. As they continue to work and advance in their careers and the kids grow up and move out, they are earning the best money of their career and they retire into a 22 or 24 or even sometimes a 32% tax bracket. Then eventually they're forced by IRA, RMD rules to take that money out and give the current tax bracket percentage to Uncle Sam. They avoided 12% tax to pay 24 or even 32%. Very bad deal for them. And of course, we know that taxes are probably going to be higher in the future. If nothing changes, the first two tax brackets will be 25% higher in 3 short years. So what's the moral of the story? Go to a tax planner and do some thoughtful and proper tax planning. Don't go in with the idea that they should always lower your current bill using whatever means is necessary. Go and ask, should I lower my bill? Then talk through all the possible future fact patterns and use all those facts to decide what to do now. I'm Navy Dowdy, and remember, financial fitness can be beneficial to your wealth.